Good day, everyone. I believe you can hear me now. Can you hear me? Can you hear me? If you can hear me loud and clear, please drop a comment. Can you hear me loud and clear, please drop a comment. You're welcome to today's live stream. Good morning, Allah. How are you doing? So the first thing I'm going to talk about this morning is the reason for the GJ trade I took. Those of you in the group, I posted the chart on the group, so I'm going to give the reason for that buy trade on GJ. We're going to start with that before we analyze the market for today. Mr. Onwoko, good morning. Good morning. Okay, I believe you all can see my screen clearly, right? You can see my screen clearly. Okay, so what are the reasons for the buy trade on GJ? The reason for the buy trade on GJ. Now, you can see the patterns we have here. You can see the pattern. Now, let me start with the daily time frame. Now, yesterday candle closed strongly bearish. Yesterday candle closed strongly bearish. Now, after the close of yesterday candle, now most people would have jumped in to start selling because yesterday candle was strongly bearish. Now, after the close of yesterday candle, now what? So after the close of yesterday candle, first thing I did was to get the average price of this candle. The average price. You know how I get the average price? I add up the opening and the closing price of the candle. You could also do pivot point analysis, add up the high, low, close price, divide by 3. You could also use the average, just get the add up the opening and the closing price of that candle. So let's add up the opening and the closing price of yesterday candle. 206.36 plus 205.34 divide 2. So that's 205.85. 205. Okay, that's it. So you can see this was the average. Now the market, now if you're trading with the average strategy, okay, when the market opens below the average strategy, the average value or average price, you would expect that price will keep dropping. Your bias for that day should be bearish. Your bias for the day should be bearish if the market opened below the average price. Now you can see that today's candle opened below the average price. So I was supposed to sell. So why did I buy instead of selling? Now, after the close of yesterday candle, if you go down to 4-hour time frame, and the pattern on 4-hour time frame indicates that the trend is about to change from bearish to bullish, you don't sell. Are you getting me? If you go down to 4-hour time frame and you are able to identify a bullish reversal pattern on 4-hour time frame, then you don't sell. You would only consider selling after price tests this average price. Okay, that is when you will consider selling. So let's go down to 4-hour to identify the pattern that formed on 4-hour time frame. So you can see yesterday, this was the last candle for yesterday. You can see. And before the close of this candle, you can see the pattern we had here. We had an hammer, we had a spinning candle, which indicates change in trend from bearish to bullish. This is the reason for the buy. Now, beside this, let me apply this here. Now, after the formation of this pattern on 4-hour time frame, I need to go down to 1 hour and 15 minutes time frame. On 1 hour, we should be able to identify a bullish reversal pattern on 1 hour, and hopefully on 15 minutes or 5 minutes, there should be a shift in market structure. So you can see the pattern we had on 1 hour also. You can see the pattern we had on 1 hour. At this point, there was a sweep of liquidity. You can see liquidity residing at this low was swept. Then we had a bullish reversal pattern. We had this candle that looks like an hammer, and this bullish candle engulfed this hammer candle. So this is a bullish reversal pattern. Okay. Now let's go down to 15 minutes. So you can see on 15 minutes. Can you see on 15 minutes? The liquidity was swept at this point. You can see they swept this low, and there was a shift in market structure at this point. So that's the reason for the buy. You can see we had a shift in market structure at this point, and that is the reason I took this buy on GJ. That's the reason I took this buy on GJ. Also, if you go down to 1 hour, another reason for not selling GJ, though the market opened below the average price, is the fact that if you apply your Fibonacci from this swing low to this swing high, you can see that price is at a discount. You can see that price is at a discount, and at a discount, you don't look for opportunity to sell. You look for opportunity to buy. Now I'm buying with the hope that price will pull back to the premium area. I'm sorry guys, can you guys still hear me? Can you guys still hear me? Can you guys still hear me? Can you still hear me? Can you guys still hear me? Can you still hear me? Yes, Mr. Nwoko, yes. I use that average calculation, that is adding the opening and the closing price. That helps me in defining the trend of the market for the day. So if the market opens above the average, I'll look for opportunity to buy. If the market opens below the average, I will look for opportunity to sell. But when the market opens below the average and the market is currently at a discount area, or a bullish reversal pattern forms on a lower time frame, I would not sell. I hope you get that. I would not sell. And if the market opens above, that is the next day candle opens above the average price, I would not buy if price is at a premium area or a bearish reversal pattern forms on a lower time frame. I hope that is clear. I hope that is clear. So right now I'm buying GJ and my target is the premium. I want to see price pull back to this area. This is where I'm going to take profit on GJ. Okay, this is where I'm going to take profit on GJ. So we had this fair value gap here at this point. We had this fair value gap and it got filled at this point. So this high, I see this high as an area of liquidity that might be haunted. Okay, this level, this is where I'll be considering taking profit. Though I think by now I think after this class, I'm going to close some profits on this trade. I'm going to take some profits on this trade. Okay, I'm going to take some profits from GJ after this class. Okay, so let's start by analyzing DXY and yen baskets. So let's start with the daily time frame. Okay, so you can see DXY. This is DXY. You can see how yesterday candle closed. It closed as an hammer. It closed as an hammer. You can see it closed as an hammer. So you should be looking for buy. Should be looking for buy on DXY and not sell. For those of you buying GBP USD, you are counter trading. You are counter trading. You are trading against the trend of the market. You are trading against the trend of the market. Now let's apply our trend line. If you look at the structure you have here on GBP USD, if you look at the structure you have here, okay, let's apply the trend line. You can see it's obvious that this structure is a bullish structure. It is obvious that this structure is a bullish structure. You can see it's forming series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Why did price break out from this trend line at this point? Why did price break out from this trend line? It's because of the liquidity residing at this previous low. That is what they came for, this liquidity here. That is the reason price broke out from this trend line. Normally, the market was supposed to respect this trend line, but because of the liquidity residing at this previous low, that is the reason for this breakout. Now, if we adjust, let's take this trend line to, hold on a few minutes. Let's assume you apply your trend line here at this point. Let's assume you applied your trend line here. You can see at this point, the market was respecting the trend line. And at this point, it broke out. It broke out from that trend line. Why did it break out on that trend line? Because at this point, if you go down to lower time frame, there's a fair value gap here. There's liquidity that was supposed to be swept here. That's the reason price broke out. And that same thing is what has played out at this point. That's the same thing that has played out at this point. They had to come and sweep liquidity residing at this low before pushing price up. Now, let's get the average price for DXY. You can't see this pattern on DXY and be selling dollar. It would be wrong for you to be selling dollar after the formation of this pattern. So let's get the average price. 99.48 plus 99.40 divide to 99.44. 99.44. So you can see this is the average price. This is the average price. Can you see this? And so this candle opened, I think what's the opening? 99.44. And our average price is 99.44. You can see. So today's candle opened at that same price. Okay, it opened at that same price. So this is a buy setup because the candlestick pattern that formed is an hammer, and also you can see that it formed at a discount area. If today's candle had opened below the average price, I would still go for buy. I would still go for buy because price is at a discount. I cannot sell at a discount. I look for buy at a discount. If you apply your Fibonacci from this swing low to this swing high, price is currently at a discount. So I would love to see price pull back to a premium area. And at this premium area, we have a fair value gap. So this would be a very good area to consider selling if you want to sell. Okay, so I would expect dollar to come fill this fair value gap before going bearish, though there is a high probability that dollar might come to sweep this relative equal high. Okay, but my first target for the dollar will be this zone. My first target for the dollar would be this zone. So for those of you who are buying GBP USD, you have to be alert. You have to be alert. As you are making profits, keep trailing your stop loss. Keep trailing your stop loss because the market can change its direction anytime soon. Okay? If you are buying, ensure you keep trailing your stop as the market keeps going in your direction. Okay? So that's my take on US dollar. Let's look at yen basket. So yen basket should be bearish. Yen basket should be bearish. For GBP JPY to be bullish. Remember several weeks ago, I told you guys yen is coming to fill this fair value gap. I told you guys yen is coming to fill this gap. That's where it's heading to. You can see it's coming to this gap. Okay. So let's go down to daily. Okay, so yesterday candle closed strongly bullish. It closed bullish, and that's because I think at this point we had a fair value gap at this point. That's the reason for this pullback. Let's confirm that. After the formation of this candle, let's go down to lower time frame. So there's a fair value gap that was created. Okay. Let's go down to 1 hour. Okay, so we had this fair value gap at this point, and also I believe we go down to lower time frame. So you can see this high here. The normal swing traders have executed sell after the formation of this candle, and their stop losses will be residing at this previous high. And I think what they did was to come and sweep that liquidity that was residing at this previous high. I also believe if you go down to lower time frame, like 15 minutes, 5 minutes, or 1 minute, there's a fair value gap after the formation of this shooting star. There's a fair value gap there. So that is the reason for this retracement. So price pulled back to a premium area, and it's pulling back now to a discount area. It's pulling back to a discount area. We might see a little resistance at this point, resistance from buyers at this point. Okay, we might see a little resistance. Okay, so I'm very bearish on yen basket. I'm bearish on yen basket. So JPY pairs should be bullish for today. But entering a buy at the current market price is at a very high risk. If you're just taking a buy on JPY pairs, you're taking a very high risk for less reward. You're taking a very high risk for less reward. Okay, should have entered earlier. Okay, so let's look at currency pairs. I'm going to be using my MT4 for currency pairs. If there's any pair you want me to analyze, let me know in the comment section. Just drop it. Drop it. If there's any pair you want me to analyze, let me know in the comment section. If you're here to give the video a thumbs up, please give it a thumbs up so that others can get to see this video. Give the video a thumbs up so that others can get to see the video. So GBP USD. Okay, so you can see GBP USD is about to sell. GBP USD is about to sell. Today, there are no major news. We're not expecting any major news today. No major news today, unless Trump tweets. There's no major news today. So most likely, technical outlook will play out. Okay, technical setup has a high probability of playing out. But at the same time, volatility might be very low. Volatility might be very low. You can see that price has been ranging since the close of the market yesterday. It's been ranging. Okay, so let's start with the daily time frame. So you can see yesterday candle closed bearish after sweeping liquidity. The buy we saw yesterday, the main purpose of that buy was to sweep liquidity residing at this previous high. That is the main purpose of the buy. That is the main purpose of this buy. So last week, they actually pushed price up to come and fill this fair value gap here. You can see this fair value gap. Okay, last week they pushed price up to come and fill this fair value gap. And they know after the formation of this spinning top and this doji, most retail traders would have executed sell. They know most retail traders have executed sell, and their stop losses will be residing at this high. So what they did yesterday was to come and sweep the liquidity residing at this previous high. And yesterday candle now closed as a shooting star. It closed as a shooting star. Let me get the average of yesterday candle. 1.324 plus 1.3213 divide to 1.3218. 1.3218. 1.3218. So you can see today's candle opened below the average. It opened below the average, and most times when the market opens below the average, price will pull back to test that average before it starts moving in that direction. As you can see, the market has tested that average price. The market has tested that average price. So there's a high probability for price to pull back to a discount area. So my expectation on GU, okay, I would love to see price pull back to a discount area, which would be below level 50. Okay, I would love to see price. I think there's a fair value gap here, a tiny fair value gap at the discount area. Okay, this tiny fair value gap, that is most likely going to be the next draw on liquidity. Okay, that is most likely going to be the next draw on liquidity. So I'm selling GBP USD to this zone. I am selling GBP USD to this zone, and that's about 94 pips. Yeah, about 94 pips from the current market price. So if I'm aiming for 94 pips, I would love to risk maybe 50 pips. 50 pips, that will be my risk for at least 90 pips reward. Okay, so that's my take on GBP USD. That's my take on GBP USD. I'm bearish on GBP USD. I'm bearish. Okay, I'm bearish on GBP USD. Let's see what's happening on 1 hour. Okay, so price has tested the average price. You can see price has tested the average price. So there's a high probability that GBP USD might break out. Okay, it might break out from these lows. Let's see 15 minutes. Okay, so you can see we have our zigzag above a bearish candlestick. Okay, and if you apply your Fibonacci from this swing high to this swing low, let's start from this point: swing low, swing high, price pulled back to a discount area to fill this fair value gap. Okay, then the previous range, we had this high, swing low, price pulled back to a premium area, and there's a high probability that price will break out from this. If this zigzag closes above this bearish candle, there's a high probability that it will sell. There's a high probability that it will sell. There's a high probability that it will sell. Okay, there's a high probability that it will sell. Now on 15 minutes time frame, we have this fair value gap on 15 minutes time frame, which could be the draw on liquidity for today's market. So if I'm going to take any trade on GBP USD, my stop loss must be above this zone. My stop loss must be above this next draw on liquidity, this buy side inefficiency. My stop loss must be above. So if I'm going to take this trade from this point, and I'm setting my stop loss above this level, that means my risk will be about 50 pips. Yeah, about 50 pips. So my stop loss has to be at this level. Okay, anything that make price breaks this zone, then there's a high probability that GBP USD will keep buying. There's a high probability. Okay, so that is where I will set my stop loss. I'm not going to set my stop loss at this point initially. No, I'm not going to set it at this point. Okay, my stop loss will be at this point initially. Then if the market breaks out from probably maybe this low, if the market breaks out from this low, then I might adjust my stop loss to maybe this level. Yeah, this level. From this level to this level, 3246. And as the market keeps going in my direction, this could be the next drawn liquidity. So if I'm selling, my target will be at this area, this level. Okay, so that's my take on GBP USD. I hope that is clear. I hope that is clear. That's my take on GBP USD. Let's see Euro USD. You can see the pattern we have on GBP USD is also similar to what we have on Euro USD. So let's start with the daily. Let's get the average price here. 1.1594 plus 1.1609 divided by 2. 1.1601. Okay, so you can see the average price here. The market opened above the average price. So in this case, one was supposed to look for buy opportunity, right? Because the market opened above the average, but I will not buy because if you apply your Fibonacci from this previous high to this previous low, you can see that price is at a premium area. Price is at a premium area. So that's the reason I won't take a buy trade. And also, if it's the candlestick that closed yesterday closed as a shooting star. It closed as a shooting star. You can see that it closed as a shooting star. So it will not make sense for me to buy. Okay, so I'll be looking for sell opportunity on Euro USD. Okay, so after the close of yesterday candle, let's see what we had on 4 hour. This move, this buy yesterday was to sweep liquidity residing at the high of last week, Thursday and Friday. And I think if you go back at this point, there's a fair value gap that was created. That's the reason price went that far yesterday. Let's just confirm on a lower time frame. So there's a fair value gap. A fair value gap was created. Let's see. Okay, this is a 4 hour. Let's see 1 hour. It's most likely we had a fair value gap. So you can see also we had this fair value gap. So that could also be the reason price broke out from. Okay, that could be the reason. If you go down to lower time frame, I'm sure you still have a fair value gap at this point. Let's go down to 15 minutes. There's still a fair value gap above at this point. That is the reason price broke out from that. Let's see 15 minutes. So you can see on 15 minutes, we had this fair value gap. You see, that could be the reason. Okay. You see that this fair value gap, that could be the reason price broke out from the highs of Friday and on Thursday candle to go fill this fair value gap. And after filling the fair value gap, though it broke out, if you go down to lower time frame, maybe 1 minute, I'm sure there's still a fair value gap above this one we identified on 15 minutes. There's still fair value gap above it. That's why it broke out from this one. And after filling the fair value gap, look at the pattern it gave us, a bearish pattern. This would have been a good sell for yesterday market. Yesterday, this would have been a good sell. Okay. So what I see on Euro USD at the moment is sell. It's sell. But if you're going to sell Euro USD, your stop loss initially should be, let's see, Stop loss, let's see 15 minutes. Okay, so you can see on 15 minutes we have this fair value gap. So if you want to sell, your initial stop loss should be above this next draw on liquidity, this buy side inefficiency. Your stop loss should be at that level. So if you are buying from the current market price 1641, 1607, that's about 40 pip. Yeah, because you have to set your stop loss few pips above this level. That's about 40 pip stop loss. Okay, 40 pip stop loss. And if the market is able to break this low, you can now adjust your stop loss. Okay, this could be the next draw on liquidity on Euro USD. This could be the next draw on liquidity on Euro USD. Okay, so once price is able to break this relative equal low, once price breaks this relative equal low, you can now adjust your stop loss to the high of this candle. You can now adjust your stop loss to the high of this candle. Okay, that's my take on Euro USD. I hope that is clear. Okay, EA, UJ, and gold. EA, UJ, and gold. EA, UJ, and gold. Okay, so let's look at gold before other instruments. Gold. Gold. Gold is bearish. I also have a trade on gold. I have a trade on gold to be in profit of close to 200 pips on gold right now. Should be in profit of close to 200 pips on gold. So you can see yesterday candle. You can see yesterday candle. The buy we saw yesterday in the market was to come and sweep this liquidity. That's the reason for the buy. The yesterday buy. The buy we saw here yesterday on gold was to come fill, sweep that liquidity that was residing at this high. Because this is a bearish reversal pattern, and a lot of retail traders would have executed sell after the formation of this candle. They had to go sweep that liquidity before selling. So what we have here, this is a sell. This is a sell on gold. Let's get the average price on gold. 4222.9 plus 4232.0 divide 4227.45. 4227.45. 4227.25. And 25. So you can see today's candle opened above, it opened above the average. It opened above the average. So most people will jump in and start buying because the market opened above the average. But like I said, I would not buy when the market is at a premium area. If you apply your Fibonacci from this swing high to this swing low, you can see that price is at a premium area. So you rather look for sell than buy, despite that the market opened above the average. Also look at the candlestick pattern that formed. You can see the candlestick pattern that formed is a bearish reversal pattern. If you go to 4 hour yesterday, the bearish reversal pattern formed on, you can see the pattern we had. We had what looks like an hanging man here. Can you see this? It's a bearish reversal pattern. So when you have these patterns like this, you don't look for buy, you look for sell, despite that the market opened above the average price. I hope that is clear. Price is at premium, a bearish reversal candlestick form, then you should look for sell. So gold, we have this fair value gap here, and there was an attempt to fill this fair value gap at this point. There was an attempt to fill this gap at this point. So I believe gold is likely going to come and fill this fair value gap before going bullish. Okay, this is where I'll be looking for opportunities to buy gold. So I'm going to sell gold to this zone. Okay, I'm not going to wait for gold to get to this zone before I close all profits. I'm going to keep closing, trailing my stop, taking profit out of the market. As the market keeps going in my direction, I'll be trailing my stop and also taking some profit out of the market. So my bias for good is bearish, though if you are selling from the current market price, you would be taking a very high risk. You should have sold at this point. Okay, this would have been a good entry to sell after the market closed below the average price. That would have been a good entry for gold today. But if you have not executed from this level and you want to sell from this point, you would be taking a very high risk. Okay. Euro Australian dollar. So let's start with the daily. This is a buy on Euro Australian dollar. This is a buy on Euro Australian dollar. Price is currently at a discount area. Okay, price is currently at a discount area. And also let's get the average for yesterday candle. It's a buy on Euro Australian dollar 1.7718 plus 1.7740 divide 1.7729. 1.7729. So you can see, and today's candle opened at 1.7732. It opened 1.7732. That is few pips above the average price. Okay, so let's just apply our Fibonacci on. This is a swing low, swing high. Price is currently at a discount area, so we look for buy. Price is currently at a discount area, we look for buy. Now let's go down to 4 hour. So you can see on 4 hour, if we apply you can see swing low, swing high, price is at a discount, then we should expect price to pull back to a premium area. And at the premium area, we have this fair value gap that has not been filled. There was an attempt to fill this gap at this point. There was an attempt here. So I see stop losses residing at this previous high that need to be swept. So there's a high probability Euro Aussie is coming to fill this fair value gap. So if you are buying from the current market price, I would advise that your stop loss, okay, if you are buying from the current market price, your stop loss should be around this area. Let's see, your initial stop loss should be at this area. So let's calculate the risk here. Let's see from this point. Don't set it here. This might be used as liquidity. It will be too close. And this is high. This is high. This is high. But initially, this should be where you should set your stop loss initially. Then if price breaks out from this high, or you can just set it 20 pips below. 80 pips is too much. Just set it 20 pips below the low of this candle. So your risk should be between 55, 55 pips. Set it 20 pips below. So your stop loss should be around this area, 55 pips. You can see what played out here. This move, this sell was to come and fill this fair value gap. Can you see that? This sell was to come fill this fair value gap. You can see that. So set your stop loss few pips below this level. Okay, few pips, maybe 10-15 pips is okay. And once price breaks out from this high, you can adjust your stop loss to the low of this candle if a candle closes above these highs. Okay, so that's my take on. And your target should be targeting this area as TP. This should be your TP zone. Okay, I hope that is clear. So lastly, we'll be looking at UJ, 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 UJ. Like I said, the yen is bearish, so you should be looking for buy. Though you can't buy UJ at the current market price. It has already moved. So just let it be. Let it be. You already missed this move on GJ. See, this is where the move started from. This is where you should have bought. So if you didn't buy from this point, forget about buying UJ at the moment. Over 120 something pips. Forget about buying UJ from the current market price. UJ is still very bullish. It's still very bullish. Okay, it's still very bullish. It's still very bullish. So that's my take on UJ. It's a buy, but this is not the right time and price to buy GJ. This is not the right time. NZD USD is positive correlated with Euro USD. So if Euro USD is bearish, look for your bearish pattern on NZD USD. Look for your bearish pattern on NZD USD. I don't have to analyze all the instruments. I've told you guys these pairs are positively correlated or negatively correlated. So if I analyze just one GBP, for example, GBP is the pairs that have USD as the counter or quote, you should know that other pairs that have USD as the counter will most likely go in that direction. Okay. Let's see inside the USD. Let's just see the chart. It should be bearish. I actually also took a trade on NZD USD. I sent it to those on the signal group. If you're interested in signals, you want to be following my signals, just let me know. Let me know. If you want to be getting signals from me, let me know. As my students, if you have paid for any of my course, you only pay 10,000 naira monthly, 10,000 naira monthly, and you only renew your subscription if we end the month in profit. If we end the month in profit, that is when you renew your subscription. If we don't end the month in profit, you don't pay. You keep getting the signals. If you're not my student, you pay 20,000 naira monthly, 20,000 naira monthly, and you only renew your subscription when we end the month in profit. Any month that we don't end in profit, you don't renew your subscription. You don't renew your subscription. Okay. So if you're interested, you can send me a DM. Send me a DM. Okay. Template. So let's not talk much here. So let's start with the daily time frame. Okay, so you can see the pattern. You can see the pattern for yesterday. It's a shooting star. It's a shooting star. So you should know that that's a bearish pattern. It's a shooting star that formed at a premium area. Apply your Fibonacci. Apply your Fibonacci from the swing high to swing low. Price is at a premium. A bearish reversal pattern form. We had an angry man. The buy that we saw yesterday in the market was to sweep the liquidity residing at this previous high and also to fill this fair value gap we have at this point. You can see we had a very tiny fair value gap here. That's another reason you can see. That's the reason for the buy we saw in the market yesterday. And after filling the fair value gap, we had a shooting star. And if you get the average price, it's most likely the market opened below the average price. But let's just get it 0.5724 plus 0.5728 divide to 0.5726. 0.5726. I will be taking down this video in the next 2-3 hours. I will be taking down this video. So if you want to watch the replay, do watch it in the next 2-3 hours. I'm going to take down this video. What I'm sharing on this live stream, I'm not supposed to be sharing it publicly. I've only shared this with my students. I'm not supposed to share this publicly. Okay. Okay, so you can see. So today the market opened, the opening price is 5728 and our average price is 5726. 5726. Okay, yeah, good. It's a sell. Yeah, nice one. Nice one, Daniel. It's a sell. So it's likely going to sell to this fair value gap. It's likely going to sell to this fair value gap. So that should be your target. The target should not be less than 50 pips on NZD USD. Be patient. Be patient, okay? Be patient. Don't close the trade prematurely. Just be patient. There's a high probability between today, tomorrow. Okay, I think there's a major news for the dollar tomorrow. Before that major news, NZD should at least deliver 50 pips, at least 50 pips. 50 pips. So that will be all for today's session. I appreciate you all for your participation, Mr. Lighton, Mr. Nwoko, Mr. Daniel, Mr. Peps, who else again? Mr. Isaiah, okay, Joro Boy. I appreciate you all for your participation and I wish you all a profitable trading day. Bye for now.